In our last outlook, we mentioned that expensive valuations left markets vulnerable to negative news flow. And unfortunately, we have had a bit of bad news in the last couple of months. Firstly, President Trump stepped up his protectionist rhetoric, and this raised concerns about trade wars with China. Secondly, the US Federal Reserve continues to be focused on raising rates. And finally, we had some somewhat lackluster data coming out of Europe, and also some political risk in Italy and in Germany. Against this backdrop, we've reduced our exposure to equities a little bit. And within equities, we have two key themes. Number one, America first. Trump is very focused on boosting the US growth rate, and so we continue to favour US equities. Secondly, emerging markets. Although emerging market equities are vulnerable to trade wars, they are also offering quite attractive valuations at this point in time, so we continue to emphasise emerging market equities. We have lower exposure to Japan and Europe. These markets are also exposed to the trade cycle because there's a significant proportion of industrial stocks in these markets. But they don't offer the same attractive valuations that we find in emerging markets. And there's also political risk in Europe. Overall, we expect the summer to still be a little bit difficult. But the good news is that the markets are repricing, valuations are improving, and this sets us up for some interesting opportunities as we head into the autumn.